This is your LMAX Exchange technical update for Monday, May 15th, 2017. Eurodollar. So the euro right now is in the process of consolidating, but is looking to put in that next higher low ahead of continuation of gains since breaking out several days back to confirm a bottom of some form off the 2017 low from January, a multi-year low at 103.41. At this point, the focus on a medium-term basis is for an objective extension up towards the 114 area, and any setback should be very well supported ahead of the previous higher low at 105.70. It is possible, though, that we see this correction extend a little bit lower despite the bounce that we saw on Friday, with room for a move down towards the 107 area, especially after the market had gapped open several days back after the first round of the French election. So look for a higher low, ideally well ahead of 105.70, potentially around current levels, but again, don't rule out the possibility for a drop towards the 107 area in favor of additional gains. Right now, we're just in the process of a choppy consolidation, and until we see a break back above the recent 2017 high, scope does exist for the correction to extend a little bit further down towards the 107 area. Sterling dollar. So cable has done a very good job being supported on dips well ahead of that previous range high, that previous resistance turn support at 127.75 from December of 2016, and that breakout that we saw above that level does suggest the market is putting in a longer term base, and there is risk now for fresh upside towards the 135 area. Remember, we had consolidated in roughly between the 120 to 127 area, maybe a little bit more, so let's call it 700 to 800 points, and if we project that move to the top side following the recent break, that 700-800 point move, let's call it about 800 points, takes us up to the 135 area, a measured move extension, which coincides with some key meaningful medium-term resistance going back to earlier in 2016. At this point, though, if we do see setbacks, they should be very well supported in the 125 area, with only a break back below 23.60 to compromise the constructive outlook for sterling dollar. Dollar yen. So dollar yen is in the process of pulling back a little bit from recent gains, but overall the market now has shifted into a more neutral outlook as it pushes back up from those 2017 lows, back above some key resistance at 112.20 and above some falling trendline resistance that had been seen in the 113 area. But at the same time, despite the bounce, the market is still holding below 115.60, a previous range high from earlier this year. And while it holds below there, there's no point on getting too bullish this market. So again, trading right now between some key levels at 112.09 below. That's a recent low that we saw on the 5th of May. And above, we have that 115.60 resistance, and a break on either side will be required for clear directional bias in dollar yen. Euro Swiss. So Euro Swiss is traded back towards a key psychological barrier at 110, and how it responds to this level could dictate the medium-term direction in this market. If it establishes above 110, it could open the door for a move up towards 115 over the medium term, but if it fails to establish above 110 over the coming sessions, we could see a sharp breakdown back towards the recent lows in the 106 area. So that's going to be key to watch over the coming sessions. So let's see how the market responds to any tests on that 110 psychological barrier. Aussie dollar. Aussie has come off significantly in 2017 since making a high at 77.50 and looks poised for additional declines back towards medium-term support from late in 2016 at 71.60. If we do see this bounce extend a little bit, that's fine. A lower top now is sought out ideally in the 75 area, with only a break back above 76.11 to compromise the bearish outlook. Dollar CAD. So dollar CAD is consolidating its recent run of gains to fresh 2017 highs, just shy of 138. If we do see setbacks now, the market is just looking for a higher low, and so those setbacks are viewed as corrective, with the market seen well supported ahead of 134 and only a break back below 132.20 to compromise the constructive outlook. Look eventually for a push above 138 to open the door for the next key target for this market at 140. Kiwi dollar. So the New Zealand dollar has bounced out from recent 2017 lows, but overall, as you can see here, the structure is quite toppish, and any rally should be very well capped, ideally into this and ahead of 70 in favor of that next downside extension towards next key psychological barrier at 65. At this point, only back above 71 would compromise the bearish outlook for Kiwi dollar. SPX 500. The S&P 500 is doing a good job holding up by record highs, and a recent run to record highs above that previous record high from early March suggests that the market could be poised for fresh upside towards the 2475 to 2480 area over the coming weeks. This followed a period of a record high from 24 down towards the 2320 area, a little bit less than 80 points, and so that move projected to the top side takes us up to 2475, 2480. Only a breakdown back below 2320 or 2322, that low that we had seen back on the 27th of March, would compromise the highly constructive outlook for the S&P 500. Gold. So gold is looking like it wants to put in another higher low, possibly after continuing to do such since 2016, basing out just ahead of 1100, putting in higher lows and higher highs as it continues to extend this recovery structure. The market has most recently been supported ahead of 1200, and if the market can hold out with this recovery and continue to extend gains, it could be poised for a fresh upside back above the recent 2017 highs at 1295, opening the door to a measured move objective in the 1335 area, which is just shy of the 2016 high at 1375. Right now, on a short-term basis, if the market establishes a close back above 1240, it will do a good job strengthening this prospect and putting that pressure back on the top side. However, back below recent support that we saw at 1214 would delay this outlook and open the door, exposing potentially and threatening a break back below the recent previous confirmed higher low at 1195. A break below 1195 would compromise the constructive outlook and put the pressure back on the downside. But for now, the market is looking to put in that next higher low, and a close above 1240 will strengthen that outlook.